What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the coming weeks. These stocks include names like Apple, AMD, Tesla, NVDA, and Meta. We're going to give you all the resistance and support points that you need for these stocks, that way you know exactly what critical levels to watch for breakouts and key reversals. So let's go ahead and get started by first talking about SPY, and we're going to do so on the monthly candles. For those of you familiar with our videos, you know we always like to start with the daily candles, but in this case we're starting with the monthly candles, obviously because we just wrapped up a full month and that was September. So now that September's candle is fully developed, we can expect a new candle to pop up for October when the week starts, but for now let's analyze what happened in September. September is the first month we closed below the previous month's lows since last year's September. So just like last year, we sold off all of September and we closed below the previous month's lows. Now, just because we did that, it doesn't mean that we continued going down. In fact, last year, this was the reversal point when it came in October. So last year, we happened to close just above the 50-day moving average. This year, we're closing just above the 10-day moving average, which means that if October can manage to hold that 10-day moving average and continue moving up, then we can rally into the new year. Now, there are some things that are happening this week that are important to note, but before we jump into them, let's talk about SPY on the daily candles. Something you have to note about candles is that the longer the time frame you're looking at, the more slowly it transpires. And so since we are focused on the next few days or few weeks, let's talk about SPY on the daily candles. On the daily candles, it's painting a very different story than we saw on the monthly candles, which means that the long-term outlook is still bullish, but the short-term outlook is still a bit uncertain. You can see that on Friday, SPY saw once again the strongest selling volume it has seen all month long, and this is a trend that we have seen all of September. For the last few videos, we pointed out how strong the downside action has been, and we did point out that SPY was going to continue coming down. So here in this case, SPY is once again trading below its 10-day moving average on the daily chart, which means that if you are a buyer or if you are a bull, the first thing you needed to get back above is that 432 level, which is right around our resistance here on the intraday chart. So this is the hourly time frame, and so if SPY can climb back above the 432.65 resistance, this is right around the point it got rejected at once and twice, and see it's right around the point that this is the 10-day moving average is trading at. So if it can climb back above that level, then the bulls should regain control and move SPY towards the 438 target. Above 438, SPY can slowly climb towards 444.50 and continue its move on up. Now, if you are a bear on the market or if you are bearish on the market, then you need the market, or SPY in this case, to move below 422.29 in order for it to sell off towards 416 and potentially sell off further towards 412. Now, here are some things that happened last week, and here are some things that are going to happen this week that can potentially influence the market. First of all, last week we got the Q2 final GDP reading, which came in at 2.1%. So this is slightly below the second reading. However, the economy is still growing, and it's growing at a healthy pace. What we also got last week was the PCE report, which showed that inflation is still on the trend of cooling down. Without food and energy, inflation did come down month over month, and it's right around 3.9%. PCE is the preferred measure of inflation that the Federal Reserve uses, and so if it is showing a downtrend, it's typically a good sign. This week, the focus shifts towards the US unemployment rate, which last month came in at 3.8%. This month is expected to come around that same point. If it comes over 4%, that may cause a little bit of uncertainty in the market, because the higher unemployment is, the more likely that we start leaning towards a recession. Now, keep in mind, unemployment at 3.8% is still at a historic low. Average unemployment is around 5% historically, and so here around 3.8% is really not a bad unemployment rate, especially considering the high interest rate environment that we're in. Now, last but not least, one more thing to pay attention to this week is going to be the government shutdown. So it's looking like the US government is going to shut down. There are many implications behind that. Some of the major implications are going to be, first of all, analysts at Goldman Sachs are estimating that a government shutdown could cost the US 0.2% in GDP growth per week that is shut down. So obviously we want to see our GDP growing as a country, and so if our government is shut down, it can hurt our GDP. Plus, major reporting agencies like the BEA and the BLS which the Federal Reserve uses to make important monetary policy decisions. So they choose whether to raise interest rates or not based on what the BEA and the BLS report. So without these reports, the Fed may go into their FOMC meeting, which is expected October 31st, without clear economic data, which obviously has its own implications. So now that we know what's going on the economic front, let's go ahead and switch over to our watch list. We're going to start off by talking about Apple, and here you can see that just like SPY, Apple is trading below its 10-day moving average, and it has done so for most of September. We can see that on 9/6, the stock moved below that 10-day moving average, and the buyers have not been able to regain control all month long. Now we're heading into a new months, which means that things can change, but so far it's looking like sellers are still in control. If you're looking at Apple on the shorter term time frame, which is the hourly time frame, here are some levels to watch. If you are a buyer, first of all, of course, you needed to regain above that 10-day moving average, but more importantly, you need the stock to at least move back above 180.80 in order for it to regain a little bit of a bullish footing. This is the level to watch because Apple has been rejected right at it, here about 3 times, and here once again about twice just below it. So buyers need to regain that level in order to regain a little bit of control and start moving the stock towards that 190 level. Above 190 is going to mark the most bullish territory for Apple, and that's where it could break out towards that 198 to 200 mark. Now, if you are a seller on Apple, or if you are bearish on Apple, obviously below 173.55, which is the level it got rejected on Thursday and Friday, that's going to be the most bearish range that it could stay in. And if you want a downside continuation, you need a break below 167.62 for a continuation towards 162 to 163. We will be updating these levels next week on our video, so make sure you check back in and watch that video. Now for the next stock on our watch list, we're going to talk about AMD. AMD actually managed to regain above its 10 and 20-day moving averages to end last week. So surprisingly to everyone, when the market was selling off, buyers at AMD were suddenly interested, and that does have to do with MU's earning. Remember, Micron reported earnings last week, and they actually rallied the day after earnings. And so semiconductors in general may have gotten a boost from MU's earnings. Now AMD closed just below its 20-day moving average, but not too far below it. So if you are a buyer, the first point you need to watch going into this week is where is the new candle going to open? Is it going to be above the 20-day moving average or below? If it's above, it's likely that AMD will continue its climb up. And here are some levels to watch for the short-term charts. First of all, the first resistance in focus is going to be 105. Above 105, AMD can continue its climb up, and we expect it to move towards 110 to 112. Above 112 is a very significant breakout for AMD because this is where it double topped. If you are not familiar with stock market patterns, we will leave a link below for you to access them through PDF. But if you are familiar, then you know a double top pattern is going to be a very strong rejection at the same resistance point, which is exactly what happened here at 112. So twice buyers said that they were not willing to pay 112 for the stock, and they rejected it off that level. Here in this case, if AMD does break above 112, we can expect it to go towards 118 to 120. This is a very aggressive price target, and so it's likely that it's not going to happen this week unless the entire market somehow manages to bounce very strongly and AMD can go up 20%. However, we don't expect AMD to move towards that target this week, so make sure you check in next week so we can talk about some updated levels. Now to the downside, AMD can be bullish as long as it holds above 99.35, but if it breaks below that level, then it can turn a little bit sour and sellers can step in and take it below 93. If it breaks below 93, then the downside price target is going to be around 89, and below 89, it's 81. And again, this is a very aggressive downside price target, so it's not likely going to hit it this week. Now the next stock on our watch list is going to be Tesla. And looking at it on the daily candles, Tesla did bounce on Friday. However, it closed below the 10, 20, and 50-day moving averages. It managed to hold above the 100-day moving average. Now the last time Tesla came to test the 100-day moving average, it did regain the trend and rallied for weeks ahead. However, this time around, although it seems like it's bouncing, I wouldn't trust it so quickly because sometimes these are fake outs and you have to pay attention to the shorter term time frames for you to make your judgment. So here in this case, Tesla will need to move back above 256.15 in order for it to regain even a more bullish position. The next price target above that is going to be around 261. So if you are taking calls or taking a long position on Tesla, You can do so here with a breakout above 256.15, and your stop loss would be just below that point in the case that it fails, or you can enter above 244 and have a stop loss just below 244. Tesla's second price target is above 261 is going to be around 271. This is an aggressive price target because when Tesla was selling off from 271 to 261, you can see that it did so very quickly. Therefore, the move back up, if that resistance is broken, is going to be a very quick move as well. To the downside, Tesla's biggest support is going to be around 234.60. Below that level, Tesla can fall towards the 228 mark. The next stock on our watches is going to be NVDA. Now, NVIDIA, just like Tesla, bounced off that 10-day moving average and closed above the 10-day, below the 20 and the 50. So if you are a buyer on NVIDIA, of course, you wanted to see it end the week above these two marks. The shorter-term time frame on NVIDIA, you want to focus on, first of all, the resistance at 443.40. Above that level, the stock can rally towards 460 to 461, a pretty aggressive price target. And the second price target is going to be around 466. Now, to the downside, NVIDIA is still kind of controlled by the bulls, considering the fact that it's above that 100-day moving average and the 10-day moving average. But if you are bearish on NVIDIA and you wanted to see it move further down, then you need a break, first of all, below 423.80. But the real break is going to be at 407.25. Below that mark, NVIDIA can fall sharply towards 396 and even 373 in the coming weeks. Once again, we will be updating these levels, so make sure you subscribe and watch for the next video. The next stock on our watches and the final stock on our watches is going to be Meta. Now, Meta had a very volatile week last week, but volatility brings opportunity. In fact, we were able to catch Meta as a group. We entered at 0.53 and we sold for 100% gain around 103. So a very fantastic move. It gave us a lot of opportunity, and this is how you can capitalize on stocks like these. We talked about Meta in our last week video, and we used our levels in order to take this trade. And so if you are using these levels in the week ahead, make sure you're following them and plotting them on your chart so you can take advantage. We actually ended up entering Meta calls just above our support and rode it all the way back up. But if you are watching Meta this week, first let's talk about it on the daily candles, where you can see that last week it managed to kind of climb above those levels, the 10, 20, and 50-day moving averages, but then again on Friday it closed below them. So Meta buyers and sellers are still very uncertain, as we mentioned in our previous videos. They have been holding these levels for quite some time. A big move is coming. We just don't know which direction that move is going to be yet, because this range seems to be the range that it's stuck in for now. Now, Meta, on the short-term charts, if you are bullish, you need a move above 313.30 for it to move towards 318 to 319. If you are bearish, you need to move below 285.50 for sellers to take control and move it towards 276. So I want to thank you guys for taking the time to watch this video. Make sure you subscribe and like, and see you guys next week.